Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita, and let's quickly look at the Nifty. And we've, in fact, sustained the gains that we've made all through the day. And of course, it was a weak start to the day, but we've done fairly well as the day has gone by. Two sectors which are doing well. One is the Nifty Bank, which is up 0.5%. So that's leading, obviously, the Nifty 50 index higher. I'll talk about constituents in just a bit. But there you go. That's on the Nifty Bank. Doing fairly well for itself, nearly 300 points in the green for the Nifty Bank. And you're looking at the auto index, which is doing extremely well for itself, 1% plus higher on the Nifty auto index, as you can see. So those two obviously standing out. Outside of that, pharma, metals, PSU banks, all of the others also doing decently well for themselves. In terms of points contribution, you look at HDFC, Kotak, and you'll see that likely when these two move the way they have today, 1% higher on HDFC, 2% plus higher on Kotak, you'll likely see the kind of move on the index that we've seen. But outside of that, even a Reliance is chipping in, and so is an Eternal. Let's pull up a Reliance, see how that one has shaped up through the day. Well, it's built on the gains again, 0.6% higher, and mind you, it's a heavyweight, and therefore you're seeing the impact. But Eternal is where some bit of zing is, and look at that, 2.6% higher. Largely, Kotak and Eternal really standing out in trade today. In terms of the gainers and losers as well, the tilt is towards the Adani twins, maybe Adani Enterprises doing very, very well for itself, 3% higher. That very strong participation leading to this kind of move on an Adani Enterprises. But outside of that, Geofin doing well, Tata Steel up 2%, DRL also up around 1.8, 1.9 odd percent, and a Maruti is up 1.7% as well. So you're seeing all of those stocks trading in the green. The breadth on the Nifty is extremely strong as well. So that is also carrying the market higher. You're talking about quickly onto the Nifty Bank as well, because that's the other one which is chipping in meaningfully. Of course, Kotak we did speak about standing out. But outside of that, you'll see a Canara Bank, a Federal Bank, an SBI. All of those also in some fashion are chipping in to the Nifty Banking Index. AU Small Finance, after the kind of move it showed yesterday, is down 1.8%. So that's the way in which the Nifty Bank is trading. And in terms of the mid and the small cap, the broader market's also trading well in the green. And you're seeing a good tick on both of those. The Nifty small cap is also up around 0.5% thereabouts. Again, the favorable breadth is what is standing out and is aiding the market. And I'll quickly pull up the Nifty 500 as well, just the gainers and losers. DCM Shriram standing out there. Natco Pharma, KFin Tech, BSE, Ather, Angel One are all the ones which are really standing out. Sobha also is the one standing out, but on the negative side, 3.3% lower on a Sobha. So that's how the tilt is. The advanced decline continues to remain positive, which is aiding the markets higher. Naveen Mathur joining us though, and completely separate conversation. This is a conversation on the Rupee, of course, and the Rupee has slipped to a fresh all-time low, very close to 90.5 now on the dollar. Naveen Mathur, Director Commodities and Currency at Anand, Rathi Share and Stockbrokers, joining us. Naveen, we continue to slip. Talk to us about whether you're seeing this as a calibrated slip of the Rupee, or is this something of a concern? Your sense, first off?
Thank you very much, Harsh. Good afternoon to all the viewers.
Great having you here.
Thank you very much. So I think it's a calibrated move. I don't think so that the Rupee should depreciate further. The negative cues, particularly today, have been the Fed meeting results. The little bit of a hawkish stance still remains. The Federal Reserve decided to see the inflow of the coming data. And I think the expectations or the probability is that in this particular year, which is means the next year, the Fed would cut a quarter basis point, one cut more. So that's one of the negatives, so to say. But the Rupee did fall around 0.5% on a fresh record low, which is at a 90.48 to a dollar. Uncertainty to a trade deal with the U.S. still drags on. We are seeing foreign fund outflows, the dollar purchases by the importers, and the widening current deficit weighing on the rupee. The U.S. Trade negotiators are in India, and we are working with the U.S. administration to resolve the differences and finalize a trade deal ASAP basis, which is crucial for New Delhi to secure relief for Washington's punitive 50% tariffs, which we have, particularly with the import of the Russian oil. So I think those cumulative factors are definitely leading the rupee to a slow and steady fall. We have seen around 6% year to date, kind of a year fall, and one of the worst of the currencies in the market, and particularly the worst in the Asian market. So I think rupee should stabilize in around 90.91, but 90.90 and a half would be something as a prudent level one should look into.
Okay, all right. And do you believe that the RBI should intervene, and why shouldn't it? We've got rate cuts which the Fed has done, which should actually weaken the dollar against the rupee, but that's obviously not played out also due to the fact that we ourselves are in a rate cutting cycle, and therefore that would justify it, Naveen. But what's the sense like going forward? You're saying that it'll remain between 90 and 91. You seem to be suggesting that the RBI is not going to do too much of intervention. Is that your sense? And what are the causes of this, Naveen?
Yeah, no, I think the uncertainty still remains. The current account deficit, in spite that we are doing well on the equity markets and all, in spite of that, the fundamentals remain strong, but the FPI money is pulling out. So, I think even the trade deal negotiations which we are hearing, and I think that is one of the major impact today that the India's advisor, Mr. Nageshwaran, sees the U.S. trade deal would be signed by March. And as per the Bloomberg, this is what the news is. So we are still 3 months away, it seems, to finalize the trade deal with the U.S. And these 50% tariffs definitely impact exports, and therefore the inflow of the dollars. So I would say that around 90 would be something the RBI would be closely monitoring the situation at, and they would not like the rupee to decline further beyond 90.5 or maybe max 91. But the fundamentals still doesn't talk about the levels which we are currently seeing for rupee against the dollar. We are one of the best of the economies. The GDP numbers for the last 2 quarters have been the best in the world, I should say, 8.2 and 7.8% quarter one and quarter two. So I think overall trend still remains positive for India, but these are just, I would say, blips in the entire geopolitics, which is making rupee to depreciate against the dollar.
Thank you so much, Naveen. We'll leave it at that and we'll let you go. Thanks for those insights coming through with regard to the rupee. Of course, rupee slipping to a fresh record low, 90.48, like really, really close to 90.5 now. Kunal, do you track currencies at all?
Yeah, I do track currency. It's part of the cycle of the market as well.
Perfect. So give us your take on the rupee.
Difficult to preempt, any kind of a top or a bottom over here, depends on how you look at. But I think this is a concern for the markets. The historical context which I have seen over the last many years is that whenever rupee has depreciated, it's actually impacted the index returns over the near to medium term. So I'm not sure whether this 90 to 91 range for the rupee in the near term could be maybe a top or a bottom the way you look at in terms of the near term levels. But if the rupee comes back to say 89.5 or 89 levels, that's where I would believe that the confidence in the markets would start to be a little bit more better. But if it continues to depreciate, say even to that 90.5 or 91 mark, it will have a bearing on the equity markets, especially for the indices.
Okay. And Kunal, clearly the markets are completely discounting this slip by the rupee. Absolutely comfortable with the way in which they are trading. And they're doing so well today. So comes as a surprise to you? Is this a positive surprise? Also, it's expiry day. How much of that has had an impact?
Yeah, so not a surprise as such, but it was expected. It's just that it didn't start off on a very, very positive note for the indices, because after yesterday's Fed rate cut, it's bound to have a positive impact in many of the emerging markets, and especially for our markets as well. So I think it's good to see that after the first half an hour or first 1 hour of juggle for our markets, we've managed to make a good comeback for the Nifty and the Bank Nifty. What I like about the market texture is today that we've managed to hold on to that 25,750 mark, which we've been indicating over the last couple of days, that that's a very good support point for the index, and broadly if it holds on, then you could expect the index to come back into a bounce back or a recovery mode. So that I believe could be a very strong indicator that the markets are now looking forward on the higher side, and it gives a cushion for the index, being higher by almost 150 odd points from that key support levels gives the market some bit of cushion to try and absorb maybe any kind of a such kind of a knee-jerk impact in terms of news flow, events like rupee depreciating, etc. So that I believe could be a comfort which one needs to be waiting out for. The other part, for the markets is in the last hour or so, there was an intraday sell-off or a trimming of the gains for the Nifty and the Bank Nifty, but we've managed to halt that in between, and it's good to see that the Nifty and the Bank Nifty still holding on to the positive territory.
Okay. All right. And your picks for this afternoon, Kunal?
So I'll stick with the ones which I gave in the morning, because I think sticking to large caps is a very prominent kind of a theme and much needed in this time around. So I would go with the same two picks. Adani Ports, the stock which has done reasonably well for itself today throughout the trading session. So continue to be bullish on the stock with a target of 1540. Stop loss could now be trailed a little higher from earlier given level of 1470 to now 1490. Reliance continues to be a top draw. I think the stock has done reasonably well, recovered quite well from the intraday lows, but the stock still seems to be very strong on the short-term chart. So would look out for 1580 as a target for Reliance Industries and stop loss at 1510.
Okay. That's the couple of picks coming through as well. We'll continue to discuss markets, but we're going to take a very, very short break. Stay tuned. We'll come back with more, of course.